The United States is the most prosperous nation on Earth. Hold on, let's check that on Google. It seems they are not even in the top 5. Wait, what's this? The United States is one of the most prosperous countries in the world. That's good enough, we'll go with that. So, the United States is one of the most prosperous countries in the world. But in 2022, US consumers are feeling the bite of hard economic times, and possibly even harder times are ahead. At the gas pump, with $8 a gallon gas in some parts of California. At the grocery store, with increasing prices and supply shortages. And in their bank accounts, as COVID stimulus has dried up, the money flow has slowed. In the words of Elon Musk, it's been raining money on fools for too long. I think he was talking about companies rather than individuals there, but you get the point. All that free money has led to the first of 5 indicators that suggest we are now in a recession. And in this video, we're going to take you through them all. This is Dirty Money. Number 1. Inflation. 40% of all the money the US has ever printed was printed in the year 2020. The US government did this to deal with their own policies of closing businesses in response to COVID-19. As they handed out free money to the masses, stimulus videos became their own category on YouTube. You could follow along and keep up with how much free money you'd be getting each week.
This is your news report and your second stimulus check update and your stimulus package update as of Friday, October 30th.
And because people were avoiding going out, consumers spent all of that money ordering stuff from Amazon.
Amazon CEO Jeff Bezos has made an extraordinary amount of money during the crisis.
They were buying essential items, of course.
David Hines is accused of using federal pandemic bailout money, PPP, to buy a $318,000 Lamborghini sports car.
I'm sure that was essential to his business. Anyway, as the economy has reopened, this money kept flowing for some time. There were even more stimulus bills passed in 2021 that arguably weren't needed because the economy was almost fully reopened. And this has led to inflation at levels that haven't been seen since the 1980s, with the consumer price index currently running at 8.3%. And this is an indicator that the US is heading towards a recession. In fact, every recession since World War II has been preceded by inflation, with only one exception. But how is inflation dealt with by the Federal Reserve? Well, if interest rates are low, they deal with it by raising rates to encourage people and companies to save rather than spend and borrow. This slows demand for goods, so businesses have to lower their prices to attract people to buy. But the act of lowering demand weakens the economy. Well, interest rates in the US have been near zero for some time, so the Fed has been forced to hike rates to deal with the current high inflation. It's like the movie 127 Hours, where James Franco is trapped with his arms stuck under a boulder. In order to free himself so as not to die of hunger and thirst, he has to cut off his own arm, causing even more risk of death. Central banks normally lower interest rates to deal with recessions, but right now, inflation is so high that the Fed has no choice but to raise rates to deal with it, and they are raising rates into an economic downturn, weakening the economy even more. How do we know we are already in an economic downturn? Negative GDP growth. Over the years, a recession has been defined as 2 consecutive quarters of negative growth. Well, guess what? The US economy went negative in the first quarter of 2022, contracting at a rate of 1.4%. Now, we still don't know how things are going to look in quarter 2 of 2022. Many analysts are saying that quarter 1's negative growth was caused by a trade deficit due to a surge in imports, and predict that quarter 2 will be positive. But they predicted quarter 1 would be positive too, with Dow Jones predicting 1% GDP growth. So if the US sees a second quarter in the red, we are officially in a recession. The advanced estimate for quarter 2 will be released on July 28th, so we could be in a recession already without even knowing. Although I guess we have been given numerous other clues like inflation and the stock market tanking over the past few months. And guys, when the stock market drops, that is actually the best time to start investing in stocks, even though that sounds counterintuitive. But in the words of Warren Buffett, be fearful when others are greedy and be greedy when others are fearful. So everyone is afraid right now because the markets have dropped a lot, but this means that stocks are actually on sale. Now and over the next few months, it will be time to be greedy and buy up cheap companies. And to invest, you need a brokerage account. And right now, Webull, the fantastic commission-free stock trading app, is offering 6 free stocks for signing up and depositing any amount of money. These stocks together could be worth up to $12,600. Luck of the draw, what you get. I'll put the link below, guys, if you're interested. All right, next factor. Inverted yield curve. An inverted yield curve happens when interest rates on long-term bonds fall below the rates for short-term bonds of the same creditworthiness. The most common example is comparing the 10-year Treasury bond and the 3-month Treasury bill. The yield curve should go up and to the right, but here is what it looked like in 2006, just before the economic crash of 2008 and 2009. Well, in April this year, the interest rate on the 10-year Treasury dipped below the 3-month rate for a moment. However, the yield curve for April overall was still positively shaped, up and to the right. And Forbes is saying that there's nothing to worry about. So I guess there's nothing to see here. Well, that is kind of true, since all recessions have been preceded by an inverted yield curve, but not all inverted yield curves have led to recessions. And if this recent inversion is an indicator of a recession, it's going to be at least 6 months or more from May 2022. But there are some other more immediate indicators: low savings rate and high credit card debt. After a huge boost in the savings rate during the time of stimulus, the US savings rate has now dropped to 4.4%, the lowest since just before the 2008 recession. With inflation surging, people are out of money. Having exhausted their savings, they are now turning to credit cards, with credit card balances, which dropped during the pandemic, starting to surge back towards all-time highs. 229 million new credit card accounts were opened in the first quarter of 2022, which was higher than the previous quarter. Credit card balances hit $841 billion in the first quarter and will possibly reach an inflation-adjusted all-time high later this year. With the Fed raising interest rates, the rates on credit cards are also rising, creating a perfect storm of higher debt with higher interest rates and thus higher payments for those not paying their full balances every month, and thus less purchasing power for the consumer to stimulate the economy. And when that happens, it can lead to a rise in our final indicator: the unemployment rate. This is a lagging indicator of a recession, since at the beginning of a downturn, companies tend to hold on to employees so that they can spend less money on hiring. But as a recession gets worse and they realize this is for real, there comes a point where layoffs happen, and they happen fast. As the economic crisis started in late 2008, unemployment was just a little above 5%, but then it rose quickly throughout 2009, peaking in October when it hit 10%. That's almost a year after the crash started and 3 years after the US housing market started to decline. So next time someone tells you there's no recession, look at the unemployment rate. It's fine. You can tell them that it is a trailing indicator that only serves to confirm your fears once you are in a recession, and can't be used to accurately predict a recession, since it typically only significantly increases after a recession has started. Alright guys, thanks for watching Dirty Money. I hope we haven't scared you too much with this video. There may not be a recession coming, but it is highly likely. You can cheer yourselves up by getting 6 free stocks from Webull with my link in the description section of this video. Please subscribe for new videos every Monday and Thursday, and we'll see you next time. Bye bye.